Hi, everybody. It's Natalie Hemmens, your favorite real estate agent in Southern California. And today I have a very special guest. I'm very excited to talk about financial planning and wealth building with my friend, Steve. Steve is a certified financial planner, and he's also a real estate agent. Steve, thanks for joining me.
All right. Thanks for having me. I'm excited to be here.
I am too. So let's get started. I came up with a couple of questions, and my first one for you is, what are three things that we can do to start building wealth today? People have, their stimulus checks, they've been saving money, hopefully through the pandemic. And we want to talk about ways to invest your money and building wealth instead of maybe spending it all, doing something, substantial with it. What can you recommend?
Right. It's a great question. I would just say, the first thing is to really take a look at what you're spending your money on. So the first step in financial planning that we do is we sit down and we look at people's expenses and income. So how much you bring in versus how much are you spending. So the second thing that I like to do is sit down with people and look at what's their tax strategy. And that's a big thing, making sure that you're understanding, number one, you have to pay taxes. Right? Some people forget about that.
When you're self-employed and it's not being taken out of your paycheck, it's easy to forget, right?
Don't wait and then you're surprised, oh my gosh, I owe, right? I see a lot of people get caught in that. So just plan on knowing that you have to be proactive, monitoring your income and expenses, and figuring out a strategy to be able to know what you're going to owe. But the tax strategy could involve setting up a retirement plan for yourself, which lowers your taxable income. Where does your income fall in the tax bracket? How do you get the maximum result out of funding a retirement? And then the other part might be, hey, if it's real estate related, right? Owning property has a lot of tax benefits. So if you're buying real estate, knowing how does that work for me in my tax situation?
Those are really good ones. And I think that your point is like, be proactive about it instead of reactive and finding out after you've made all of these decisions and be like, okay, I'm going to make this decision because these are the tax benefits and implications that are going to follow from making this decision. So I think that's
absolutely.
But thinking about some of my buyers right now and people getting into a situation where they can build wealth through real estate. I am a real estate professional, and as you are. So I want to talk about what are, a couple of ways that people can start saving for a down payment, because sometimes it's not always about a huge amount of money in your bank account coming from you. You can take it out of your 401k and you can do different things to get that down payment. Can we talk about some of those options for people?
Absolutely. Number one is systematic. I believe it comes out of your account, just like the Hulu subscription. If it's $1,000 a month going into some type of an investment or a savings account, it should be a combination. Some, liquid savings obviously is not returning much right now. You're getting 0.3% maybe from an online savings bank.
Pennies.
Yeah, it's not much. But there's also really secure and safe ways you could save. I have her investing in some municipal bond ETFs. So they're pretty stable, but they have a nice return and they're tax-free. Nice. So HELOC, which I'm actually in the process of getting one right now too. Nice. A HELOC can be a great tool. You have to understand how the HELOC works, right? You pay interest only on it. So, understand it can be adjusted. The rates can go up. If rates go up, the rate might go up a little bit. But if you understand those things, it's a huge tool to leverage your primary residence to be able to buy investment property. And that's what we did. We used about $25,000 out of the HELOC. She was able to fix his property up. I helped her put a great tenant in there. He's been there for 5 years now. So she bought that house for $300,000. She put $25,000 into it. It's probably worth about $450 right now. She's had the same tenant in there for 5 years. She makes about $500 a month in cash. If you're buying in an area that's not in your neighborhood, right, it has to be like a vacation destination far enough away to justify that it's a vacation home. You can buy it as a second home. So that's what we did. Murrieta is in her sales territory. It's a wine country. She does a lot of business there. Kind of makes sense to buy it as a second home. So she was able to get the same rates you would get on a primary residence. right? You're not getting hit with that non-owner occupied and the extra money down that you have to come up with as an investment property. So
you can also get gifts from people. Say her
Yep.
say her dad she wants to be like her dad and do investment properties, but conceivably he could gift her.
In fact, I've got this young guy right now, and grandma is going to help him buy.
Oh,
so grandma's willing to gift him 25, 30 grand.
That's great.
I know. And he's young. He's like 25 years old. He's all gung-ho. You mentioned borrowing from your 401k. You have to talk to your provider and understand what it is that you're able to access.
Right.
I think most of them will limit you to 50,000 or 50% of the balance, whichever is greater or whichever is less. So something like that, up to 50, but you can't borrow more than half. And then you're paying yourself back with interest. So it's great. That's how we bought our house. My wife had a nice 401k. Nice. The market was cranking, and we were able to borrow enough for the down payment, and that's how we were able to get into our house. So
perfect. That's a great example then.
Yeah.
So let's talk a little bit about probate, what it is and how to avoid it, because as our population grows older and maybe the baby boomers may or may not have had trusts, or maybe they just have wills, things are getting stuck in the court system, so can we talk about that a little bit?
Oh yeah. Well, you're hitting one of my hot buttons. So, in the areas there's 6 major areas of financial planning. We start with the income and the budget, and then there's tax planning, there's investments, right? There's retirement, and then there's estate planning. And estate planning isn't just for old people, right?
Sure.
So probate, I can just tell you, I have like 4 or 5 clients who've either had parents that did not have a trust and passed away unexpectedly. One client, her mom had 2 houses, and both houses got tied up in probate, and it took 4 years to finalize that probate estate.
Ouch. And that's so confusing to people, because people think, oh, well, if I have a will and I've put in my will that I want my children to receive my home, what's the complication? What's the confusion? But they don't realize that the court system still has to look at the will and go through the probate process.
That's right. And the probate process, there are mandated fees and costs. So, I use a few years ago, it's like 3-4 years ago, average home in Orange County was about 600,000.
Yeah, not anymore.
Not anymore. It's more like 850.
Almost died, yeah.
So you're talking, let's say even at 850, you're talking $45,000 in probate fees. And right now, because the courts have been closed, they're finally reopening now.
Yeah.
They're backed up. They're like 2 years to process, 18 months to 2 years to process a probate case. And that's if everything's in order.
Right. And meanwhile, that property may be vacant because the kids live in other states, or you don't want to live in that property. And then you still have to pay the mortgage. I mean, there's so many complications that come with having a will instead of a trust. So when you have a trust, how does that protect the property from going through probate? Can you explain that a little bit?
Yeah, because the trust basically is like your instruction manual. So the courts recognize, and now it has to be fun. So the title of the property has to be put into the title of the trust, right? And then that trust dictates how the property is, number one, who makes the decisions. So there's usually a trustee or co-trustees, and they make decisions who can approve a sale or who has to, be involved in the sale, and then how the money is getting divided up. I just sold my mom's house. She's got dementia. And luckily she had the trust set up, and I have power of attorney, and I'm also the co-trustee, and I have the powers to do what we needed to do because she needs the proceeds from her house to pay for her care now. When you go through probate, they have to notify all of the relatives. So if you have a trust, it says, here's the people that get money, and here's the percentages, and this is how it works, and it's just all handled.
That's it. Yep.
In probate, the notices have to go out. Well, guess what? One of the nephews or nieces decided they didn't like the way things were being divvied up, and they contested it. And it had to go back into probate court, and it got tied up for another 2 years before they were able to settle it. And now we sold the houses, and the money was just sitting there in this estate account, and she wasn't able to distribute to everybody because of this one cousin.
So having the trust doesn't allow people to contest anything. It's just
Nope.
like the trust says this is what it is. There's no arguments about it because this is just the way that is. It's not going through the court system. So that's
Right.
a bit different. Let's switch into my last question, which I'm really excited about this question because investing in real estate as an investor and not only for your personal residence. I think that most people on the market right now are looking for a place for themselves to live,
Mm-hmm.
maybe thinking about an investment. But if you get the opportunity to get an investment property and to get a renter in there and to get passive income, it's a phenomenal way. Tax benefits and
Mm-hmm.
an extra, stream of income. I mean, who's gonna not want that, right? So can you talk a little bit about some tips to acquiring wealth through as an investor?
Yeah. I mean, there's a lot of ways to do it. I think you touched on something that you may not even known that you touched on.
What's that?
I've had a lot of clients go, because maybe they're not getting into their dream home right away because of the price, but you could start somewhere. You could buy that property. You could start building a little equity over time and socking away a little dough. And then maybe you buy another property, moving up strategy, and you rent the property that you're living in now.
Yes.
And because you will lock today's interest rates, you can lock in the best interest rates we've had in history.
Yeah, the history
of buying as a primary residence. You can get in with less down payment.
Right.
Right. And then, you don't have to necessarily invest a ton of money into making it perfect and beautiful and amazing,
Because it's not your forever home.
Right. And renters they don't care as much about all the amenities and the upgrades and all that. They want it to be nice and clean and in a good area.
Yeah.
But rents are appreciating too.
Yeah.
So if you buy in a good location, you can then find a quality tenant.
I think that's an amazing tip to start small.
Yep.
Build up that appreciation, pay down the mortgage to build up that equity, take that and buy something new, rent out the other one. So you're like double ending your wealth building right there.
You're building your real estate portfolio one piece at a time. Last year, I think Orange County appreciation, the average condo appreciated 14% over the last year.
That's great. No, you just got to get in the game because the longer you wait, the higher the prices are going, and you're just paying more and more the longer you wait instead of having.
And if you're a renter, what are you doing? You're giving money to somebody else to pay their mortgage.
It's gone.
So you don't have any of the tax benefits. You're not building the equity. You're not living in a place that you can make your own home.
Well, Steve, we have come to the end of our Zoom.
Aww.
It was so nice to spend some time with you. We should do this again. Don't despair. You are on my list of people to call for financial advice. So thank you so much for, sharing your knowledge with us. And it was a pleasure to have you.